Welcome to Protea Weekly. My name is Zane Stevens. I am the founder of Protea Financial. It is February 27th. We are nearly 2 months into the year, and I feel like things are going well. I feel like I have a lot of positive energy around me. Not perfect, life is never perfect, should never be perfect. But as a business owner, as an accountant, as just a person like living their life, I feel very good about where I am after 2 months in the year. I've met a lot of my goals and I continue to strive to reach all of my goals. And one of those goals obviously was 52 episodes of Protea Weekly. And here we are on episode 12. It's flown by unexpectedly, and I really am enjoying it. I'm enjoying taking the time on a weekly basis to talk to all of you that are willing to come here and spend some time and hear my thoughts on different topics. Now, last week, I spoke specifically about inventory costing and the importance of costing your inventory on the accrual basis so that you can track your sales, your cost of goods sold, and your gross margin. That accrual basis of sales and cost of goods sold provides you with the basis to make really good business decisions. Now, personally, I think it's important for all businesses to follow an accrualish form of accounting. Sales, COGS, even if you're selling hours, match that labor and the revenue, put them in the same period. I believe it's important. Now, there's a bunch of these accrual things that happen that who cares about, right? Like, who cares about straight lining leases? I personally don't. It doesn't add any value. It just confuses the user, in my opinion. But the cost of goods sold and inventory specifically really does need to be tracked on the accrual basis. Now, I am the accountant for the wine industry. My company, Protea Financial, and my amazing team of 40 people focus in on the wine industry and the alcohol beverage industry in general. So it is important for me, as somebody who's talking about inventory, to take some time to specifically talk about the industry that I focus on. Because it's easy to say track your costs. And we did touch on a little bit of examples previously on the wine space, where if you look at a bottle of wine, you want to include the juice in the bottle, the packaging that that bottle is in, including the labels and the closures. And remember to never forget about your inventory allocation of overheads. That is definitely including labor. It is going to include some allocation of overhead for the facility that you produce your wine in. It's going to include depreciation of the equipment required to produce that wine. And then it could include a bunch of other costs. And in the winery, harvest labor is important, trucking of grapes is important, and one that sometimes gets forgotten is the cost to put the wine into the bottle. Your bottling costs are really important. Now, you wonder why inventory is confusing. It's mostly because people just think of purchasing a finished product. Like I could purchase this pen. In the manufacturing space, it is harder, and it becomes even more complicated in industries where the process from raw material to finished product is an extended period of time. In the wine space, it takes at least 1 year to grow the grapes. Once you harvested the fruits, it takes a whole 12 months, 11 to 13, to grow the next harvest. Those grapes then need to be crushed. There needs to be fermentation. And in most cases, especially on the clients that we deal with who are in the much higher end products, there is an aging process that could take place in a barrel or a tank, both, and even sometimes finally in the bottle. That process could be as short as September to the next spring, 4 to 6 months. But realistically, it could be as long as 2, 3, 4 years. So you account for 1 year of growing, plus let's say 2 years in the tank. We're now 3 years in. Now you're bottling and then you're releasing. So we're looking at like 3.5 years before we even consider selling our first bottle. Now that creates a situation where calculating the cost of that inventory is fairly complicated, because the cost of that inventory does not stop once it gets into the tank. Yes, it might be easy to identify those costs. How much did it cost me to farm those grapes for 12 months? Or how much did it cost me to buy those grapes at a point in time? Or if I'm buying juice, how much did that juice cost me? It might be easy to identify the equipment depreciation for the equipment to press that grapes and get it into the tanks. Fairly easy to identify depreciation on the tanks or barrels that I'm putting into place. Easy to identify the harvest labor that I needed to pick those grapes and press those grapes. But now it gets complicated. We're in a work in progress form. We went from the raw material being a grape to a work in progress, some juice. But based on the way we're making that wine, that juice is not going to be ready for 2 years. That juice doesn't just sit in a tank for 2 years. Time and effort is put towards it. It is stored in a facility. So for 2 years, there's labor working on it, and there's some overheads being allocated to that wine because you needed a space to keep the wine. Now, it could be as simple as a custom crush facility, and you can just allocate the amounts every single month. But when it's your own people, your own facility, your own depreciation, it gets a little bit more complicated, and you have to have good processes to do it. I personally recommend, unless you can specifically identify time, ingredients to that lot of wine, that SKU, that specific Pinot, that specific Chardonnay, the easiest way on a monthly basis is to look at how much total gallons do I have, take the total costs incurred, divided by those total gallons, and then per SKU allocate based on the total gallons on hand. So I have 1,000 gallons and the one SKU has 200. I would take my total costs divided by the 1,000 times by the 200. That would be my inventory overhead allocation for that month. And that is the facilities, the depreciation, equipment, and some labor cost as well. Now you can make it even more complicated if you take into account actual time spent, keep spreadsheets. You could create rules where, hey, in year one, it's 1 times labor, and in year, or 2 times labor, and in year 2, it's 1 times labor. Make it a little extra complicated. You can do that. But you do need a process that is repeatable and trackable to be able to allocate costs accurately. Now, there are some really great software out there that can help you identify processes, how much inventory is on hand, and when bottling occurs, that will make this process a lot easier. But for many small wineries, a lot of this is just manual notes, either on a piece of paper or an Excel spreadsheet, Google Sheets, by the winemaker. You need to get that information to the person doing your costing. That person doing your costing should understand the industry and also understand accounting principles. So a lot of the time it falls on your accounting team and specifically the cost accountant within that team. Inventory costing is something that should be managed on a monthly basis and not just once a year, and definitely not once a year by your tax provider. You should be making sure you understand the cost of every lot of bulk wine you have, so that when you get to the bottling process, that information is readily available so that it can be allocated to the finished good price to produce, plus the added costs. The added costs obviously are the dry goods, which is fairly simple to look at, right? Got a bottle of wine, it's in a glass bottle. It's got a front label and a back label. It's got some sort of closure. It could be a screw top. It could be a cork, real cork, synthetic cork, doesn't matter. And then you might have a foil over the top. People still do that. Seems pretty easy, right? One bottle, one label, a closure, and a foil. 5 items. Maybe not that easy. You need to consider other things. Over here, when we're putting in the glass, how many other bottles did we break? Sure, we bottled 1,000, but did we break 50 glass bottles along the way? Well, maybe. Then we should be allocating the total cost of the 1,050 to the 1,000 bottles we allocated. So potentially the true value of that glass is a little bit more than you think. There's generally breakage. It is a breakable product. Glass is fragile. We look at our labels. We got a front label and a back label, right? Pretty easy. One label, one label. Not so much. Our labels are very specific. They say what the wine is, what the vintage is, has a bunch of details in the back. Those labels can only be used for that specific SKU. If your printer is telling you have a minimum order quantity of 2,000, you have to allocate all 2,000 labels to the 1,000 that you bottled. All of a sudden, if you're thinking about what you're doing, your cost of your label is twice as much as the sticker price. It becomes complicated. Corks, interesting one as well. Generally speaking, if you're putting in a plain cork or closure, it's very simple, 1-to-1. But if you're one of those wineries that are putting their name and a vintage year on it, it gets a little bit more complicated. Because once you put that vintage year on it, or the name of the wine on it, or both, you can't use it again. And then you go back to the label scenario. All of a sudden, if you had to order 1,500 of those corks, well, it's 1,500 into those 1,000 units, and it's a lot more pricey. I don't care that you've got a box of labels and a box of corks sitting on the sideline. They're worth $0 at that point in time and need to be allocated to the wine you're being sold. Those are just a cost of doing business and are part of your cost of goods sold. You need to consider them, because if you don't, they'll be sitting on your balance sheet. And at some time in the future, you want to do a process where you want to sell the business, exit the business, get a valuation of the business. That's going to look bad if it's sitting on your balance sheet because you probably can't specifically identify it, or it really is worth nothing. So you have to allocate it to that inventory. Foil closures should in theory be easy, 1-to-1. Probably not that simple. You're probably breaking a few along the way. So make sure that you're doing a count before and after for finished goods that can be broken. It is very unlikely that you're going to use 1,000 bottles and 1,000 foils to bottle 1,000 bottles of wine. You're likely going to use more. And because of that, you need to allocate all those pieces of dry good, those components in your manufacturing process of a final bottle of wine, to that bottle of wine. It can get even more complicated if you have very specific packaging material that you use for your wine. Particularly people that say, I'm on very much on an allocation basis. I'm full DTC. Every bottle gets sold in the special box that tells you what the wine is and where it goes. That's great, but remember, that's your cost of goods sold. And it probably makes sense, especially if that wine is specifically going into the box when you're making the bottling, is to allocate that to the cost of goods sold as well. So be careful of, that situation where you have specific packaging. It doesn't come up too much, but it is something to remember. A couple of other weird case scenarios that happen. One that happens less likely is that, you go through the whole bottling labeling process and then you choose to say, well, this is all done, but I'm going to leave it on a shelf somewhere for another year, and that's part of our process. We age it in the bottle on the cork for a year. You have to allocate overheads for that period of time. On a normal bottle of wine, as soon as you bottle it, the overhead allocation stops. No more. That is the cost of finished goods. But if you're going to age it and you have a specific plan to age it, you do then need to allocate out overhead as you would with the bulk wine. Becomes a little bit more complicated because then you got to take bottles and convert it into gallons to do a bigger calculation to allocate the costs. So if it is part of your winemaking, great, we'll help you. But just remember, it does add some extreme complexity to the process involved. The final one that happens probably more often than you would care to believe, but a lot of people will bottle wine as shiners. And a shiner means we're not putting a label on it at the moment. So we know what's in the bottle, but we're not saying what wine this is or where it'll be done. A lot of times this can happen in custom crush facilities, negociant type clients, or just, you have a very similar blend for two wines and you want to taste it first. Give it a little bit of shelf life, breathe it if you decide, and does that go into brand A or brand B? That can happen. You will have your cost of finished goods for your shiners, but you'll have to do an additional costing at some point in the future once the label goes onto it. In theory, it really should just be a labeling machine, the cost of the labels, and maybe some labor time. But additional costing will need to be done. Do not forget about those labels that went on there. It is a part of taking the finished good into another form, and the cost should be allocated. Manufacturing accounting is complicated, and I know winery owners hate me using the word manufacturing, but wine is a process of manufacture. You're taking a raw material, turning it into a work in progress, into a finished good, selling that finished good. It's a beautiful good, but it is a finished good and it is a manufacturing process. If you are a business that is dealing with an industry where you sell a good that you manufactured yourself, I highly recommend you get an industry expert that knows what they're talking about to help you with your costing. Having good costing information so that you can set prices, make decisions on marketing plans, and potentially even decisions on what channel you can sell that wine into is really important. And there's nothing nicer than being able to close a set of financials off and you have the sales and the COGS automatically pulled through because the finished goods have been given a cost of goods sold. You immediately know what your gross margin is for the month, which allows you a better indication of what is your EBITDA, your net income, or your earnings before interest, depreciation, amortization, tax, all that type of stuff. It gives you a better sense of where you are in your business, what you need to do, and how you can improve. It might sound like I'm just being an accountant saying your cost of goods is so important. Make sure your accountant's helping you. Buy my services. I know it can sound that way. But honestly, I've been in many spaces, not just wine, in the manufacturing space, and it's nothing more important than understanding how much your product costs. Spend time getting good information on your costing to allow you to make better decisions, to take your business forward. It's very difficult to be successful if you're running blind. Get help, get accrual, costing help. I hope this is helpful. I hope this provides a bit of clarity on the complexity of inventory costing. Next week, I hope to talk to you about some technology that can help you on a day-to-day basis to make this process easier, not just from a costing standpoint, but from the compliance standpoint as well. The wine industry is extremely complicated, and you do need help to keep yourself out of prison. So until next week, go find yourself a good accountant that can help you with costing. Be kind, and goodbye.